Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. All right, everyone. So today we are going to talk to you about two Dividend Kings. That's right. We are going to continue focusing on high quality dividend growth stocks. So why not look any further than Dividend Kings, two companies that have increased that dividend for at least 50 plus years. Let's freaking go, everybody.
Let's do it, guys. Smash that subscribe button. Give us that thumbs up. Let's get to 20 freaking thousand subscribers, guys. Come on. This is crazy that we're not there yet. Been making these films for, gosh, over 3 years, guys. We ain't done. We're not over. We're just getting started. We're just getting started with two dividend stocks that are on Bert's watch list right now.
Hmm.
Curious on his take as we go through the metrics. And hey, to see if he owns them in his portfolio and to see if I own them in my portfolio.
That's right. So we're going to run them through our screener, which has three metrics: the PE ratio less than S&P 500, payout ratio less than 60%, history of increasing dividends, and that bonus metric, the dividend yield. I know at least one thing I've been looking at is over this last year, it's focusing on quality, which means you're not always buying the cheapest stock. You don't need to buy a stock that's in the single digit PE ratio to say that you're getting a value on a great company. Sometimes quality can be a little more expensive, so you really have to look back, look at where they're sitting from a valuation point, maybe even compared to the company's historical valuation, just to make sure it's cheap compared to its history, and then just look at the metrics and have some fun with it.
Yeah, exactly, guys. I mean, again, the stock market we all know is at an all-time high. We all know it's harder and harder to find undervalued stocks. We're all flocking to quality. We always preach quality in companies, and we're trying to exit those that aren't quality. Obviously, if you haven't been following our channel here, guys, stubbornly, some terrible videos that we've had to make about some of the losers in our portfolio. So we're getting back into some quality brand name, consumer staple stocks here.
Mhm.
Bert, I own both these stocks.
I don't own either of them, so this is going to be a lot of fun for me. Let's jump right into this first one. We're going to talk about Coca-Cola, ticker symbol KO. You want to know why we have Coca-Cola here today, Lanny?
Why, Bert?
Because we've talked a lot about Pepsi, ticker symbol PEP on this channel. So you know what? I was like, let's just check out Coca-Cola. Let's see how their metrics look. Because if Pepsi's looking great, but I'm sure Coca-Cola's looking great. Or if not, we're going to see why and we're going to see how it's looking there through the metrics.
We're gonna find out. We're gonna find out through these gosh damn metrics. Warren Buff, we're
Yeah.
looking at KO and the knockout stock here.
Yeah, that's right. And for Coke versus Pepsi, obviously Pepsi has Pepsi, Frito-Lay, and all they're a more well-rounded company. Coca-Cola is focused on those beverages. They don't have that big stack business. But what Coca-Cola has is the brand recognition, not just domestically in the United States, but Coca-Cola really flexes its muscle internationally, Lanny. That's where you
Well,
see it.
really flexes the muscle.
Yeah, they are the top brand. I know it was like a month ago they said Dr. Pepper passed Pepsi from like a brand recognition, soda brand recognition. They were still both well trailing Coca-Cola. So Coca-Cola has the iconic brand in the soda beverage sector.
Wow. Wow.
Yeah.
Yeah. Yeah, I mean, that is what happened. We'll see, if Pepsi does put up a fight
Oh
in
yeah.
this boxing match. But the question is, Bert, with KO, Coke up 22% in the last 5 years,
Mhm.
up this year, up year to date, but trailing the S&P 500 by
Hmm.
a ton. That stock price is at $63.70. I remember at times when this stock was down around 50 or in the upper 40s. Man, that's so crazy.
Yeah, if it ever drops there again, I will definitely be scooping up some Coca-Cola. But let's see how it looks right now. We're going to use the prices as of July 12th, everybody. That's 63.70 is the price for it. Earnings are 282. That gives you a PE ratio of 22.59. Not the cheapest company out there. I believe Pepsi landing from our analyses were what in the 19 to 20 PE ratio, if I'm correct, or it was.
Yeah, yeah, I think about there. Yeah.
Yeah, so it's a little more expensive than Pepsi, but the key is how does it stack up against their 5-year average price to earnings ratio? On Seeking Alpha, their 5-year average PE ratio is 25.48. So it's trading at a discount compared to where it stands historically.
But when you look at that dividend payout ratio, this is where Coke has always been interesting for at least the last almost 10 years. Is that dividend payout ratio, guys? So $1.94 per share per year, obviously to take that over 4 quarters. They're looking at about a 69% dividend payout ratio, Bird, which is obviously on the higher side of what we'd like to see, but Coke has really historically been there for probably the last 10 years.
That's right. And if we move into number three, metric three, the dividend growth history, that's the interesting piece. They are a dividend king. They've increased it for 61 years. Their 5-year dividend growth rate is only 3.65%. So, Laney, that definitely is related, and that's a great observation. Coke's had a higher payout ratio, which means they haven't been growing earnings as much as they can because their dividend growth rate is so low. So you can't keep increasing that dividend, putting that payout ratio too high, and potentially sacrificing a dividend in the future. So that's been the kind of Coke conundrum we've been facing over the last half decade.
Sounds great. The Coke conundrum, guys.
Yeah.
Um, Again, the dividend yield is still over 3% at 3.05%. So you're getting that above average dividend yield, about 2x at least the stock market right now. Again, they're trailing the S&P 500 up 6.5% this year, up 5.5% since last year. I mean, this is definitely a great stock for those investors out there that are just starting out who want to buy individual stocks. Um,
That's absolutely right.
274 billion market cap on this son of a gun. Huge company right here. Bert, do you want to take a stab at talking about your thoughts on them now or wait till the end?
Let's talk about them now here quickly. I mean, overall, if you had to ask me between Coca-Cola or Pepsi, you run them through the metrics, Pepsi all day right now because Pepsi is cheaper. It's got a little bit better dividend growth and the broader business. But to your point, Coca-Cola is a great company. If you just want to buy quality, you just don't care necessarily. You don't want the cheapest. You just want a great stock. Coca-Cola, I don't think will ever serve you wrong. It's just not the highest on my watch list right now. I think I'd prefer something that has a little bit more value to it, a little bit more dividend growth at these prices. If Coca-Cola hits the mid 50s somehow, Lanny, say things turn around and the company just slumps, I will be just moving in and grabbing a position in Coke while it drops, but it's still got some room to go.
Yeah, I respect that. I mean, Coke, yes, as great of a company as they are, yeah, I think you want to get that PE down a little bit, even though it's below its historical PE. I think you just want them down. I think you need the price down.
Yeah, but if it has a drop like Pepsi had recently experienced, Lanny, I think that's a great time to potentially consider Coke. So keep an eye on them because if they do have that Pepsi kind of drop, it might not be a bad time to start that position.
Absolutely. Yeah, I couldn't agree with you more, Bert.
All right, so company number two, we're still saying in the consumer stable, you're still going to find their products in a grocery store, just not in the soda aisle. We're talking Hormel, ticker symbol HRL. I know you love this company, Lanny, and you've owned them for
Oh,
a while. They have the Hormel chili, the Hormel sausages, all the packaged stuff you find in there, the critical stuff.
give me that Hormel.
Yes, and make some of that chili all day, every day for that Hormel.
Oh
What's been
man.
what's been interesting with them this year, they're down 5.58%, down 22% over the last 52 weeks, down 24% over the last 5 years. Hormel is just kind of stuck in the mud here. And unlike Coca-Cola, which is a 275 million billion dollar market cap, Hormel's is only 17 billion. It's not that large of a company in the grand scheme of things compared to some of the other dividend kings and aristocrats we look at.
Oh yeah, you're definitely right. Smaller, they do a few things and they just focus in on that.
Yeah.
They don't really step outside of their, I guess of their umbrella, right? I mean, don't they have also Jenny O's?
Oh
Is
yeah,
that
that's right. The turkey, that's right. So they have some strong brands. I was just focused on the cans. I should have gone to the meat section because that's a big one
they
there.
got that holy guacamole,
Yeah,
Skippy PB, man,
yeah,
Justin's peanut butter,
a
just to
lot.
name a few. But I know Bert, you're all about that ambassa sausage.
Yeah,
Um, but Hormel guys trading at $30.97, getting crushed. Last year down 22%, last 5 years down 24%. Again, Dividend King. This dividend video is focused on Dividend King, so you already know they've increased dividends, but they're down also 6% for sure. So trailing the S&P 500 by a ton.
Yep. So let's see. They're at 30.97 at the time we're recording this. Earnings per share is 159. That gives you a PE ratio 19.48. How does that stack up against their 5-year average PE ratio from Seeking Alpha? Great question. I'm going to tell you the answer right now. Their 5-year average is 25.47 as their PE. So they're down mightily from that 5-year average.
Yeah, down for sure, down quite a bit.
Yeah.
That's nice to see, you know what I mean? Yeah, down below 20 PE, it's nice.
Yeah.
Now, what about the dividend payout ratio, guys? So, 13 per share per year, 71% high payout ratio.
Yep, that's been their MO too. Just kind of like we said about Coca-Cola. Hormel's always kind of had that higher one. Seeing it at 70% is a little bit of an eye opener. Their 5-year dividend growth rate is 7%. They've increased it for 57 years. So we said they're a dividend king. So they have that high payout ratio. Is it going to be hard for the company to achieve that 7% dividend growth? You're shaking your head. Yes, I was going to get there too. It's going to be a tough dividend increase streak here for Hormel coming up.
Yeah, I don't know where the growth's going to come from, unless the wealthy consumer starts saying, "Hey, instead of going out, we're going to buy a crap ton of pepperoni and make our own Jenny-O's turkey burgers." But you guys tell us, what do you guys think about the growth prospects for Hormel, with that high of a payout ratio and the previous high of the dividend growth?
Yeah,
Dividend
so
yield, Bert, 3.65%. You know, as the stock's gotten punished, the yield goes up.
yeah, and that's a lot. Their 5-year average yield's 2.32%. So that's well above. That's
Ooh.
1.33% of their 5-year average yield. So that's what brings you back to Hormel is their yield is so much higher than where it is historically. Their PE ratio is so much lower than where they are historically. And the only metric that really sucks right now is that dividend payout ratio at 70%.
Yeah, yeah.
So
I mean, earnings, guys. And is the dividend safe? Yeah, probably. Um, Probably.
it is. I would say it probably is safe. It's Hormel. They've done this for a while. They've been through tough periods with consumers before. Overall, we'll put the metrics up here though. Where would I be interested in buying them? You bet. This one actually to me is one that I would consider start in
Oh,
that position, but we're not quite there yet. They've been spending the year hanging around 30. And if I'm correct, Lanny, I believe they've dipped below 30 for certain periods of time. So if Hormel dips below 30 again, that might be my time just to irrationally just take the position, buy it, and just say, let's go. But we'll see.
hey, you can get a hell of a lot of shares if it's at or below 30. So, you know, you can
Yeah.
really make a nice sizable splash in the stock market, guys. So that was KO. That was Hormel. We'll put both back up on the screen for you guys. Again, we've owned both in my portfolio slash my wife's portfolio. You know, I think if I take a look at my Hormel position, let's take a look. You know, this is updated. Yeah, I've got some modest unrealized gains on them. I think, yeah, bought a few shares at some points in time underneath 30. Um, but I've enjoyed a few years of dividend growth. I think with dividends reinvested, that's probably what's carrying the torch right now. Own about 73 shares of Hormel, and then
Nice.
we own Coke in my wife's portfolio.
Yeah.
Yeah, I mean, if they drop to, you know, 27, $29 range for Hormel, I might nibble there. Coke's got to get back down for me, though, stubbornly, you know, back down to the, you know, sub 55 mark, and then I'll start paying more attention.
Yep, everyone. So we're all watching, but they still got room to go for both these great dividend kings. Let us know what you think about Coca-Cola. Let us know what you think about Hormel in that comment section below. And if you haven't already, subscribe to the channel. Give this video a good old-fashioned thumbs up. And remember, you're either with us or you're against us, Jack.
That was Bert and Lanny from the Dividend Diplomats. Oh, and out.